Good afternoon. Let me start by saying how delighted I am to be at my first Istanbul FinTech week. And yesterday and today I've met a number of you inside this hall and outside, discussing how you plan to disrupt banking and finance. I think together we can all change and shape the way banking will be for the next 5, 10, 20 years. One big change that is coming on us, and we heard that through yesterday and today, is artificial intelligence. AI is changing banking and finance like never before. And my topic today is whether AI will destroy the human touch in banking and what do we do about it. So let's begin. Imagine walking into your bank in Istanbul, in London, New York, or Beijing 20 years back. You would see rows of tellers and personal bankers at their desks, talking to you, greeting you, and customers waiting patiently in line. Fast forward to today, when you walk into a bank branch, again, in any city in the world, you would probably be seeing no queues. You'd probably be seeing machines at the front, digital screens, and mobile apps, and AI assistants helping you through the entire journey. We are witnessing what Accenture calls today the age of AI, a transformation as significant and deep as 25 years ago when Amazon and Google first started. Wonderful. But what keeps me awake at night is, are we creating banks that are functionally correct but emotionally void? Let me share a few numbers that might surprise you. Today, AI can handle 70% of all banking work. You heard that right. Almost 3/4 of all banking tasks today are suited for either automation or augmentation. The promise, a staggering 20 to 30% boost in productivity, 20 to 30% boost in productivity, and a 6% increase in revenue within just 3 years. Now, we know there are real-life examples all around us that are proving this theory. Morgan Stanley recently deployed an AI assistant called Debrief that reduces their advisors, their wealth advisors' administrative work by 40%, or 10 to 15 hours a week. Just doing admin tasks like note-taking and marketing summaries, meeting summaries, put together automatically. Sounds great, right? It does, but here's the twist. It actually allowed the advisors to increase their client load by up to 20%. So it is not about replacing people, it's about enhancing them. Similarly, Wells Fargo has implemented AI for predictive banking services, providing personalized financial advice while maintaining human oversight. Let's go to Singapore. OCBC Bank has rolled out an AI chatbot for all 30,000 employees, enabling them to work, they claim, 50% faster. Again, they say it's not to replace them, but to help them serve customers better. But here's where it gets interesting, and perhaps a bit concerning. Despite all this technology around us, 42% of consumers cannot say that they cannot make out one bank from another. That's 42% of customers. So have we become so obsessed with technology and efficiency that we are creating what I call banking vending machines? Functionally perfect, but without any soul. The numbers tell a compelling story. Banks are going all in for AI. We heard a number today in the morning, we talked about 75% banks. My number is 97% banks globally have some form of AI programs, or they claim to have some form of AI programs in their arsenal. But here's the catch. Whether it's 75 or 90 doesn't matter. Only 12% of a well-defined roadmap of how to use it. It's like giving a teenager, your teenage son or daughter, a keys to a Ferrari without any driving lessons. Let's talk about something else happening on the ground. Credit Mutual in France, a big retail bank in France, used IBM's Watson AI to help 20,000 customer advisors serve clients 60% faster. Impressive. But what about the quality of those interactions? We don't know. JP Morgan Chase is developing something called Index GPT, and we had a JP Morgan Chase speaker earlier today, for investment advice. Sounds futuristic, but would you trust your life savings to an algorithm? In Turkey, we are seeing fascinating developments of human-AI partnership. Guarantee BBVA has become a pioneer in integrating AI to improve customer service efficiency. We heard that from a speaker from the bank earlier today. We had an Akbank speaker talking about innovative phygital branch model that balances physical and digital banking services. Now, this hybrid approach shows how banks can leverage AI while preserving human connections. Now, this transformation is happening across all aspects of banking. In fraud detection, for example, AI systems now achieve 85 to 90% accuracy compared to about 60% with traditional methods. Customer service chatbots are improved response times by up to 40%. 91% of US banks are using AI for fraud detection now. And the financial impact is substantial. AI is expected to have saved banks up to $500 billion through 2024 through increased operational efficiency. This number can only grow. But here's where we need to be careful. Banks are rushing in to implement AI without fully understanding the implications. Consider these statistics. 55% of banks report low or no AI skills. 55% banks report themselves low or no AI skills, yet 71% increasing their IT budgets for AI, with an average rise of 11% across banks. It's like building a house without architects. The human element in banking is not just about processing transactions or approving loans. It's about understanding the dreams behind a mortgage application, the anxiety behind a business loan, or the hope behind a college savings plan. Can AI really understand these human emotions? Recent studies have provided some fascinating insights into customer preferences. While AI has dramatically improved operational efficiency, 50% plus of customers still prefer human support for empathy and understanding. Interestingly, 42% appreciate a combination of AI and human support, suggesting that the future probably lies in finding the right balance between these two. Let me share a personal observation. In wealth management, where you would think human judgment is irreplaceable, 67% of services now report widespread use of AI. The interesting part is, most successful implementations are those where AI handles the mundane tasks, freeing human advisors to focus on what they do best, which is building relationships and understanding customers' needs and emotions, customers' hopes and fears. Looking ahead, we are seeing some fascinating developments. Banks are moving from simple automation to what we call augmented intelligence. Not artificial intelligence, but augmented intelligence. Systems that enhance rather than replace human capabilities. They are developing AI that can detect emotional cues in customer interactions and adjust responses accordingly. The evolution of emotional AI is particularly promising to me. Banks are developing systems that recognize and respond to human emotions through facial expressions, tone of voice, and text sentiment. This technology isn't about replacing human empathy, but about helping bankers understand and respond to customers' emotional needs better. However, this raises important considerations about privacy and consent that we must carefully navigate. Challenges remain: data privacy concerns, ethical considerations, regulatory compliance. These are all hurdles that we need to overtake and carefully navigate. And perhaps most importantly, we need to maintain trust. Because at the core, banking isn't about algorithms or about automation. It's about trust and relationships. So will AI destroy the human touch in banking? I believe the answer lies not in the technology itself, but how we choose to use it. How we choose to use it. The most successful banks would be those that use AI to enhance rather than replace human interactions. They'll use technology for routine purposes, freeing their people to focus on what matters most. understanding and serving their customers' needs. The future of banking is not about choosing AI between AI and human touch. It's about finding the right balance between these two. It's about using AI to make bankers more human, not less human. Because at the end of the day, while AI can process transactions better, only humans can truly understand dreams. Thank you.